Hopefully you had a decent day yesterday. Anybody who trades in the overnight hours, what a move we had, huh? So I'm just starting a minute or two early, given the fact that on the YouTube side of things, just kind of lob this little going live thing out there without really giving anybody a heads up or a chance to be able to prepare for it. I figured just 1 or 2 minutes early doesn't hurt on that side of things. We'll be bringing Zoom online in a minute for people that are already in the Discord and using the links that go with that. There's been a lot of work done on our website. This change and shift is coming with new content, new material. It's interesting. We get so used to seeing this stuff that you kind of forget how important it is. And yesterday I was talking to someone new to the Bullish Bears who had not yet even come over to our website and kind of looked around yet. And this trader had been struggling for over a year trying to determine strikes for a trade, building different positions, condors and iron condors and butterflies. And he just really struggled through the whole year. And yet in a 30-minute conversation was able to answer a lot of his questions and get him pointed in the right direction. And it just feels, I kind of feel bad about that, how much that person struggled for a year to get something on their own when all they had to do from the very beginning was just get signed up. So, all right. Good morning. Good morning, everybody on the Zoom. Give me just a second to adjust the audio settings. I was in a business meeting yesterday, and I had audio running through the entire house. And everybody's asleep right now, so I don't want to have this thing yelling through the house. All right. Get the share started. Been a lot of work done on the website, guys. Take a look. Don't forget, we're always adding new content. In fact, when we go live with the new educational Discord, there's a whole lot of new videos that I've been creating and have not published yet because I plan to only unroll them when we start the new educational Discords. So let's go ahead and get started. I mentioned yesterday that China was unleashing a lot of money. Comes up to like 188 trillion or something close to that number. And we were looking for indication of where they were going to put that money, right? They're not going to stay in cash. We're kind of looking to see, is it going to go into the dollar? Is it going to go into the bonds? They used it in their own market. Just take a look at Alibaba this morning. That thing is like a rocket ship, right? Either way, overseas and around the world, tech had a monster rally, right? Some buy the dip tech monsters out there, and it bled across into all the other markets. So I would say they're putting that money to good use this morning. They also eased a bit more of their monetary policy restrictions and freed up some restrictions that the banks have on that side of the world. And yeah, it's just like pouring gasoline on a fire. It lit up the market, but just like pouring gasoline on a fire, it'll be a fast burn, right? It's not like you got coal underneath there heating everything and keeping it running. So we're looking at the calendar right now. If yours is cluttered and crowded like this, and you're trying to see what the heck is going on, just uncheck show all and choose Econo Day event. that brings up the ones that we really want to take a look at. And today there is an auction at 11 o'clock. This is important to recognize because if this trend does hold until lunch, which I'm doubtful of, but if it does, this auction here could absolutely kill that trend, right? And we normally look for a trend to stop at lunch anyways, but it always has the potential to restart after lunch. And, with this right here, that could just derail us completely, flip us over, and turn us right back down again. There is an additional auction at 1 o'clock as well. And then, of course, two more kind of getting into the later part of the day. I don't really trade in the power hour, and I'm definitely not trading at 650. But for those of you that are, just be aware of where your economic events are at. A lot of these are important right now because there's this dichotomy of situations. And, from a nerd argument point of view, economists are always on one or two sides of the fence. And a lot of them are looking for validation or confirmation of what it is that they believe changing economic policy will do to where we are at, right? It's not like they got money on the line. They just more have their reputation on the line. And right now there is a big issue with inflation and the cause of that inflation and the tools that we would generally use to control that. But since it's some form of supply side inflation, the tools that they would normally use are kind of ineffective. And so there's a little bit of a fear of, well, how rampant is this inflation going to get? And what can they do about it if it's supply side? Some of the solutions to that may actually be state to state and federal. For an example, when Europe just last month was having issues with supply chain and fuel, they activated their military to drive transport trucks and make deliveries. On a state by state basis, activating the National Guard here in the States and or the military to get things like that done would actually alleviate a lot of the problems. And it wasn't long after I was talking to my wife about this, maybe 2 weeks ago, that we started to hear those kind of subtle little discussions among the states and at the federal level. No word yet that they're going to do such a thing, but it would solve a lot of this situation and kind of get us caught up from being behind so much. I'm on the ES chart right now. It's a daily chart. Why am I on the daily? You want to really come out here and take a look around once in a while. There's a lot of insight at this level. One of the things that got my attention this morning when I woke up and I seen where the NASDAQ was is I immediately asked, how far away from the 10-period moving average on a daily chart are we? Because as you'll notice with the ES, for an example, if we get more than 4% away from the 10-period moving average, we tend to turn around and fall back down again. It's the measurement of too far, too fast. All right, so this lower indicator is looking at a daily and a weekly 10-period moving average and just, asking that very simple question, how far away are we from the 10-period moving average? And as much as this run in the overnight hours may look extreme, we're actually not that far away from the 10-period moving average. So there's room to run. Yeah, I mean, I know this is already up 1.25%. It feels like, wow, I missed the whole thing when I was sleeping. It's got another 1.5% packed in there that it could travel and not even be considered out of line. The ADR is done. We can state that, right? The 12 hours since the close was not in vain. So we've already accomplished the average daily range, which means that we could double this on the day and it would, again, not even be considered abnormal. It would just be one of those rip your face off rally days, right? We do have the weekly expected move over our head, 47.47. It's a very odd number. From our current location, if we were just to make it to the next pivot, which is about what I would expect for the day, that's going to put us over the top of a 1.5% move. That is right about where I would expect it to be. Not much more than that. If we do get more than that next pivot, 46.67, it's going to come with bells and whistles, right? It's not going to sneak up on us. From our current location, we could just chop and grind up to that next pivot. But if we're going to go beyond that next pivot today, it's coming with fireworks. So at least it won't be a subtle surprise, right? It'll be in your face. Very likely we dump back down. And we've seen this quite a bit lately, right? Where we rally up in the pre-market, everybody's bullish. We've got 70% of the S&P firing on all cylinders, and the bell rings and it all dumps back down. So as bullish as it feels right now, and as we're going to go through all of the other things that make me believe that we're bullish this morning, it doesn't mean that it's actually going to carry through the day. This market could sell off 0.75%, and it would still be considered a bullish day. At the end of the day, Bloomberg would still be talking about what an amazing rally it was and buying the dip in tech. And, they would present it that way into the world, even if we do nothing more than sell off for the rest of the day. A move to the downside would first get us to challenge yesterday's highest point. We would want to deal with yesterday's open, and then we would have the weekly mid, which is basically where we closed on Friday. We would also need to resolve that VWAP. If we did get below the mid, then we will deal with the low of Friday. I really don't see us going there, guys, without news. If something really negative kicks off, you'll know because it'll hit the news. It'll be on the tape. And it would get really bloody and really nasty and really violent out there. The only way we're going to go to 44.92 today, the only way that we're going to break below 4,500 in the COG line at 45.11 would be if it gets that nasty and that violent. So you don't have to worry about that one either. My most likely scenario is that we just stay right there within that very large, very wide range. And I would even be willing to tighten it up a little bit and say that we just stay inside of Globex. That would not surprise me even a little bit. So on a 30-minute, the 50-period moving average and the pivot at 46.67 is basically going to be your structure pattern. Bringing it over to the NASDAQ, while I didn't mention it, and I should, we'll go back and take a look at it. You can see this green line here that stretches from one day to the next. That is a daily moving average. It's the 20-period daily moving average. And you can see that right now the NASDAQ is underneath its 20-period daily moving average. When we hit that today, we're going to take a rejection. If you don't yet have a trade and you're looking for an opportunity to get a couple points, load up 8 to 10 contracts and nail this on the pullback. Even if you only capture a 5 to 9 point move, if you do that with, a number of contracts, your day done. You get it and get done and get it over with. Go do something else. We're very, very likely going to bump our head on that and take the rejection if we even get there, right? So there is the possibility that we have set a high on the morning and that we won't get back up there today. There's a lot of trapped traders at the moment that are sitting there, and we very likely may not revisit that this morning. But if we do come up to that green line, that daily 20, then we're very likely going to bump our head and reject off of it at least once. There was an interesting pattern, and I traded it this morning. I was lucky enough to come back into the office right as it was unfolding. So this causes the liquidity vacuum. And when that happens, price very, very often comes back down and basically hits the reset button. Where we go from there, if the continuation of whatever caused this is still in the market, whatever that bullish exuberance was, then after it resets, it rallies back up and it continues. If it doesn't, then we get what we had this morning, that it just faded back down and went sideways again. This little play right here is something that I've traded many, many times, and it works every single time, although it never feels good. And usually I end up getting in somewhere right around in here, right? Because in the first explosion, you don't quite know, is it done yet? You know, are they going to run that sucker up a couple more candles? But it's basically a reset of liquidity. Find old examples of that and study it, because it's a really nice trade setup. It's just hard to trust it because it doesn't feel very good to trade that one. But damn, it works. So the NASDAQ is very close to a 2% move already. We've matched our ADR. We're very unlikely to make it above that 20-period daily today. And if we do, I mean, I just really think that that's going to be about it. So 16,200 would be the line in the sand to the upside. I really don't think we're going to get there today. If we do, you'll see it. It'll be in the tick and the trend and the AD. I do want to come out to the higher time frame for a moment, even on the NASDAQ, and show that 50-period bounce from the other day. You know, this is why I keep saying, if you would just take a moment in the morning to come out to a daily chart and take a look around, who knows what you'll find. So if you were trading yesterday and trying to run that rally up off of the lows, did you know we hit the 50 yesterday? You would have known if you'd have just taken a moment to come out and look at the daily chart. When we hit a 50-period daily moving average in almost any marketplace, you'll see the reaction. Why would you not want to know that we just hit a major, major moving average? And you were the only one that missed it, right? Because anybody else who knew better was watching it. So you can see right now that we're underneath that 20. We're going to be looking to challenge that 20 today. I really don't think we're going to make it beyond that. But the next line that is here is that weekly expected move. That's 213. The NASDAQ is very, very close to being at its weekly expected move. Very likely we're going to get to that tomorrow. It's also very likely that we will get above the 20 period tomorrow. Barring any sort of news, of course. We do have some economic events on the table today, and we could just reject and come right back down again. Markets can always do whatever it is that they want to do. They don't owe us anything. Very likely, however, that we break the 10, fade back down, deal with the VWAP, and tag yesterday's highest point. Keep in mind that, you know, this whole buy the dip tech run will only last to a certain point. All the monetary easing over in China, all this exuberance will only go for so far. So no matter how bullish all of this sounds this morning, stay tempered in your bias, right? We started to get bid up a little bit in the bonds, but we're nowhere, right? In the grand scheme of things, these things haven't gone anywhere all night long. They kind of ran around in a circle. If you look at the dollar, we did have a very extreme reaction, and then it paused, kind of took that rejection off of yesterday's high. We're still inside day on the dollar. Keep your eye on this one, guys. We want to keep tabs on the dollar and make sure that it does not start looking like the VIX, right? Because right now the dollar is what we're looking to find answers on. The dollar is who's buying it. Why are they buying it? Are they buying it as a global hedge, or are they buying it to use those American dollars and do something with them? When I was checking on Bloomberg this morning, Evergrande still hasn't made all of its payments, that just the interest on the payments of money due. And so, there is that still on the table, very likely that they're going to need to continue to buy the dollar. Of course, last month when they first started their payments, they didn't have any, and they basically just had to whip out their wallet and smack the dollar to the upside really hard and really fast. But they've had a month since then to slowly accumulate more dollars without pushing the dollar in an extreme direction. If they haven't quite accumulated all of the dollar they need, they may have to come back in and smack this thing again. If they do that, it will rock the market. The banks that are in the S&P, they will be affected by this. They will be affected by the bonds being moved. So watch the bonds, watch the dollar, confirm with the VIX. And as much as this move may seem like, oh my gosh, we've really gone so far, there's nothing left. There is plenty left, because we really have not traveled too far away from that moving average. Right now, each market out there has its own value for reversal. How far away can it go from the 10 before it pauses? You can see the NASDAQ sits at around 5 and 6. Now, there's two numbers being done here, and that's why there are two different histograms in there. Right? So when we go in and we only look at one, not the daily or not the weekly, then we start to see the difference between those two. Right? But you can see where we're at and where reversals start. So there is a lot of room for this thing to move. And that the extreme push basically was mean reversion, not extending beyond the sine wave, but coming up to, say, sea level. All right, S&P, change this to pre-market. Adjust the filter for around 100 names. Adjust the color scheme, although I got to say today we don't need it. We are risk on. Got the S&P 100 here in the watch list. When we look at what is negative, it is a very small amount of names. I see energy on there. Catch up a few banks. Texas Instruments. I knew I should have put that iron condor on yesterday. We ended up putting it on in Walgreens, which is also up there. So, yeah, either one. Set this one to the NASDAQ. No reason to adjust a filter. We do want pre-market change. Give it a little color adjustment. Notice the names here. There is some weakness in an otherwise, pretty robust situation. Same thing here. We got a NASDAQ watch list. You can see the list is a little longer on names that are flat or down. And again, you want to look at those names for their industry, their sub-industry, their sector. Looking at the stock screener, how many names in the pre-market are up at least 0.5%? 62% of the NASDAQ. 69% of the S&P. That's relatively bullish. We've seen it more than that, but not by much. How many names are up at least 1% this morning in the NASDAQ? 52%. 52% of the NASDAQ is already up 1%. For the S&P, 45% of the S&P is up 1%. That's really bullish this morning. Now, again, keep in mind, guys, It can all unravel at the bell. This bullish bias does not have to stick. But don't be scared of it, right? Don't sit on the sidelines and watch it run away without you, and then later on say, oh my goodness, I didn't get any of it. I will reiterate what I said yesterday about implied volatility and trying to trade naked options. I had someone reach out and say, I don't understand what you're talking about. We always buy naked options. This is what we do. Yes. And I get that, right? I'm not against day trading options, even just buying a call and buying a put. I'm not against that. What I'm trying to help you guys realize is that yesterday there was a very serious volatility crush. Okay. And in that volatility crush, we went from 0.31 to 0.27. Now, you may not think that that's very much, but when you start quantifying that value and saying, well, how much is that? Right? You come in and look at Vega. For every 0.01 that we moved, we changed in Vega value. So yesterday, when you were buying calls or buying puts and it had a Vega of 30 and we dropped 5 points, it's 30 times 5, right? That's $30 times 5. So yeah, your option may have made you money if it went in the right direction, but it also got stripped of all of that money because Vega was being sucked out of it when they dropped the volatility. And all you had to do to combat that was to turn it into a spread. Right. So I do appreciate the feedback. I like it when you guys reach out and give me your opinion and your perspective and you ask questions. But I'm not anti buying calls and puts. Right. I'm not against day trading on options. Just trying to help you guys out and get you to realize that that volatility crush, that sucked the value out of your trade. And you may have been profitable, but you would have been more profitable with less risk if you'd have just traded a spread. That's it. That's all I'm trying to say. For the sectors this morning, Jets are lit up again. I mean, really lit up. There is not one name in here less than a 2% move. That's phenomenal. Absolutely amazing. We do want to lean on the sectors today, right? Just like yesterday when I kept leaning into industrials, you really want to lean into the sectors today. You don't have to be a stock picker and go out and necessarily run your own scanners. Follow these things into their sector and subsector. Looking for red to green setups may be a little difficult after the move we already had yesterday. So what I would be recommending today is try to find things that have not yet made a move this morning, right? Try to center your watch list back to near flat. On Thinkorswim, the easiest way to do that is once the market opens and you've got change percent, you're going to want to just scroll down to where you're more into the gray area to where it hasn't yet moved, right? If kind of demonstrate what that looks like here. So we got list of weekly options. We scroll down the list until that starts to be very close to flat, or the ones that actually are flat. There's a lot of really good names that are set up because their peers have already made an exaggerated move and these just haven't made the move yet. Well, if you're looking at 9 bank stocks, 9 bank companies that are all up in the pre-market and you find another 3 or 4 that have not yet made the move, it's very likely that they're going to make the move. Kind of tease you up for a nice trade opportunity first thing in the morning, rather than focusing on something that is already up 2% on the day. The other way to go would be look for a pullback at the open, right? A lot of times when we gap up in the overnight hours, we pull back, try to attempt to close that gap before we do anything else. What I would be looking for in that pullback is that we land on top of yesterday's high and bounce off of that. It doesn't really matter what name it is that you're looking at. If it's rallied up in the pre-market enough to be above yesterday's highest point, then yesterday's highest point is going to be the spot where you're going to want to find your entry. It may not give it to you. We could just go full on rally mode and not pull back at all. But take Cisco Systems for an example. We're up in the pre-market. We're above yesterday's level. If this was to fade down at the bell momentarily, trying to catch a bounce on yesterday's highest value for my entry to go long would at least give me some structure to my trade. My entry would be based on an institutional pivot point. That one is teed up in a lot of names across the board. If you can find a red to green, great. Right? It just may be a little difficult after the moves that we had yesterday. That's what I got for you guys. Be careful, be safe. Have a good morning, and I'll see you all tomorrow.